Good morning, and thank you for joining us this morning for this combined presentation by the SBDC, the Small Business Development Center, Colleen Merrill from our UW-Oshkosh Center, as well as the Small Business Administration, Tammy Clendenning. This is Tammy Clendenning, and what we will do on this webinar today is we will take you through some of the programs that are on pause right now that have been available and we anticipate coming back online. In addition, after we go through that section, Colleen will come on and talk about cash flow options and keys for business survival during this time. Again, my name is Tammy Clendenning, and I am the lead economic development specialist with the Wisconsin District Office of the SBA. Just click forward. We realize that these are very unprecedented times here in our country, and obviously the safety and health of our citizens is of utmost importance. But we also realize that it's very troubling for small businesses right now. The SBA has been providing ongoing assistance and support for small businesses for more than 65 years, and we will continue to do so. We will continue offering programs and support to help small businesses start, grow, expand, and now recover. The agenda for today's program is, again, we will talk about the SBA programs, also talk a little bit about the potential additional funding for these programs that will include the Economic Injury Disaster Loan as well as the advance. We'll talk a little bit about the Payroll Protection Program. And again, for both of those, for context of today's purposes, I will talk about those in a historical perspective, knowing that there may be some slight modifications to the programs when and if the funding is approved. We will also talk about currently available programs, and Colleen will talk about cash flow and some other strategies for your business. So both the Economic Injury Disaster Loan as well as the Paycheck Protection Program, or the PPP, those are both temporarily closed in terms of new applications. Those will become live again when and if Congress does appropriate additional funding for that. As I'm sure you are all following in the media, we do anticipate that hopefully Congress will approve that sometime later today. It will then go to the president for signing into law, and then those programs will become open again, hopefully. And we don't know if that'll happen within a day or 2 days. Again, we have to wait until the legislation actually passes so we can see what sorts of changes are made, if there are changes, and then those portals will be back open again. So I'll give you some information in terms of the statistics for what we're seeing so far. On a national basis, the SBA did process 14 years, or the equivalent of 14 years worth of loans in just 14 days across the country. Again, that was 1.6 million loans to small businesses, representing the $349 billion. And again, that's through the PPP program. Specifically here in Wisconsin, PPP, there were 43,395 loans representing $8.3 billion. That's just here in the state of Wisconsin. We were in the top 10 for distribution on the PPP program. And to give a little perspective on that 43,000 number and the 8.3 billion, typically the SBA on an annual basis does somewhere between $500 and $900 million in a given year. I think last year the SBA did about $562 million. So that $8.3 billion in 2 weeks is pretty substantial. The EIDL loans, the data that we have as of April 20th, in Wisconsin, there were 195 loans representing about $39 million. The advanced portion, there were about 9,001 distributions representing about $43 million. And in terms of PPP on a national basis, 74% of the loans were for $150,000 or less and going across all industries. So clearly that's demonstrating the ability for even small businesses to get that. And I know in the media there's a focus on a couple of larger institutions that receive significant loans. We just don't find that that represents the majority of the PPP funds. So again, in a couple other statistics, there were 5,000 lenders that were included in the PPP program. That did include both credit unions and community banks. About 20% of the loans processed were done by lenders with less than $1 billion in assets, and approximately 60% of the PPP loans were done by banks with less than $10 billion in assets. And a really important note is that no lender accounted for more than 5% of the total amount of money through the payroll protection program. So just some interesting facts and figures. As a part of the PPP, there were many lenders that were already SBA lenders that were able to administer these programs. There were some local lenders that had not done an SBA loan for a while, so we worked very quickly with them to get their credentialing back active so that they could process new loans. We did also add additional local lenders here in Wisconsin as well as across the country. In addition to our local lenders, our banks and credit unions, the SBA did also add some non-bank lenders. So those include Intuit, PayPal, Square, Cabbage, On Deck, Blue Vine, and Funding Circle. And I think that those will be important as the PPP program rolls out again, because what we had found the first time around is that the local lenders were working with their existing clients first, obviously, because they had a relationship with them, trying to get those processed. And so some of the very small businesses that either don't have a lending relationship, don't have a banking relationship, were not able to quickly find a lender to process their PPP. So by adding some of these non-bank lenders as well as some additional lenders, the hope is that this program is really open to some of those smaller businesses that maybe don't have that banking relationship, but maybe may have a relationship with, say, a PayPal or one of these other organizations. So that's just some facts and figures. Okay, so we'll talk again. I'm talking kind of on a historical basis on a couple of these programs, but the EIDL program is the Economic Injury Disaster Loan. This is a little bit different than most of the traditional SBA lending programs as well as the PPP program. And how it's different is that it is done directly through the SBA. So it is a direct loan through the SBA. The money comes directly from Treasury. The EIDL is a working capital loan that may be used to pay fixed debts, payroll, accounts payable, and other bills that could have been paid had this disaster not occurred. Again, the application is done directly through the SBA's website at sba.gov or sba.gov/coronavirus. And as I mentioned before, this portal is down right now until additional funding is appropriated for that. However, if you are a business on the line that has submitted an application before last Thursday, those applications are still being processed, and you will receive communication. So that's both on the loan side and on the advance side. We are told by the Office of Disaster Assistance, or ODA, that those are continuing to be processed on a first-come, first-served basis. And one question that we get a lot is, well, when will I hear? I applied a couple of weeks ago. Unfortunately, here at the district office, we are separate from the Office of Disaster Assistance. We don't have access to their system, so we can't provide any status updates. We have not really gotten any guidance from them on exactly how long it will take. But what we can tell you is that we have been hearing from small businesses here in Wisconsin over the last week and a half or so that obviously they've received their advance, they've received their loans. So we do see that there is movement going, obviously based on the numbers that has been occurring as well. So if you do have a prior application in, we do anticipate that you should be hearing soon, but I can't say is that in a week or is that 2 weeks. Just know that they are working through those. There is no cost to apply for an EIDL, so we do encourage you when and if that site goes back up to go ahead and apply should you feel the need. In terms of loan approval criteria, the applicant must have a credit history that's acceptable to SBA, as well as have the ability to repay the loan. In terms of the loan information for the EIDL, the interest rates are 3.75 for small businesses, 2.75 for nonprofit organizations, and the repayment terms range up to 30 years. Most of what I have heard from borrowers is that they've either received a 15 or a 30-year term on that. Again, eligibility is based on the size and type of business, and the loan amount will be determined by the loan officer or the case manager through the Office of Disaster Assistance, and it will be based on the need. So they do have a formula that they use. I don't know exactly if that's based on 4 months worth of expenses, 6 months worth of expenses. They don't share that formula with us, but they will make the determination on what the loan amount will be. There is a 12-month deferral on the EIDL loan. So if you receive a loan, interest will accrue, but you will not have to make a payment for 12 months. One thing that we have seen in the media that people ask us all the time, if this is true, there's been media reports that these loans are limited to $15,000 or $25,000. We have received no internal guidance to that, so that has not been what we are told. And as a matter of fact, we have spoken with businesses who have received loans of varying degrees. I know there was one business that we spoke with that got a loan in the range of $500,000. I spoke with another one last week that got a loan for $168,000. We've spoken with others who have received loans in the $50,000 range. So again, just cautioning you that sometimes what you see in the media is not necessarily what's accurate. So as a part of the application process for the EIDL is the EIDL Advance. It is the same application that's done at the same time. There is a checkbox that you would mark on the application that says you would like to be considered for the advance. You provide your banking information, and then that advance will be direct deposited into your account. The advance is up to $10,000, and there is a formula. It is $1,000 for every employee up to a maximum of $10,000. If when a business completes their application online, if they don't have any employees and they put 0 in there, the system will automatically consider 1 for the owner, and then you would be eligible for the $1,000. So again, that advance is up to $10,000. It is part of the economic injury disaster loan. The funds may be used for payroll or other operating expenses, and any amount of advance that is received by a business is forgiven and does not need to be repaid. So let's say, for example, a business received a $50,000 loan and they were eligible to receive the up to or the full $10,000 grant or advance. That business is only responsible to repay the $40,000. Now we'll talk a little bit about the PPP, the Paycheck Protection Program. Again, kind of historical in nature, just simply because it is down right now. But it does provide a direct incentive for small businesses to keep their workers on the payroll. It is administered by the SBA, but the application process does go directly through your local lender. So again, through your community bank, through your credit union, or again, you also may utilize PayPal, Cabbage, Intuit, Square, some of these others that I mentioned, if you don't have an existing relationship or with a local lender. Again, when and if that program does reopen, we do encourage you to apply early. It is on a first-come, first-served basis. To the extent that the loan proceeds are used for qualified expenses, there is forgiveness, up to 100% forgiveness on that. We'll talk very briefly about that in just a moment. We do encourage businesses who receive the PPP to track their expenditures very carefully. You will go back to the existing lender that you get the that you get the loan through. The forgiveness process does go through them, and you will have to provide documentation, to them. Again, failure to have proper documentation may result in a limitation on forgiveness. We'll go back one. So I'll just give you some of the highlights on the PPP as it stands for the first round. Again, we assume it'll be very, very similar for the second, but there may be some tweaks on that. So in terms of who is eligible, it's employers with 500 or fewer employees, assuming that they meet the SBA size standards. 501c3 entities with fewer than 500 employees, independent contractors, sole proprietors, self-employed, tribal businesses meeting the SBA size standards, and veterans organizations or 501c19s. The affiliation rules are still in effect for the PPP program, meaning that if there are businesses that have common ownership or common control or management, those are all calculated together to determine the payroll count. However, there has been a change for the PPP program specifically for businesses that have a NAICS code that begins with 72, so that's food service and accommodation. That is based on a per location basis. And also there was a change for franchise operators. Franchise operators are looked at independently. And in terms of how employees are counted, all employees count. So full-time, part-time, seasonal employees all count as one. So for example, if you have a full-time employee and a part-time employee, that's 2 employees for the purposes of Paycheck Protection Program. And in addition, faith-based organizations are eligible for the PPP. The way that the loan program works, it is a 2-year loan with payments deferred for 6 months. The interest rate is 1%. The principal amount is a maximum of 10%. Again, we'll talk about that calculation in just, $10 million. We'll talk about the calculation in just a moment. There is no collateral or personal guarantees on a PPP program. There's also no guarantee fees for the borrower or the lender. And principal will be forgiven if the proceeds are used for qualifying expenses. And qualifying expenses include payroll costs, rent, mortgage interest, and utilities. And payroll costs can include all payroll costs, including insurance premiums, wages, vacation days, sick pay, but however, noting that qualified leave wages and qualified sick wages that a business takes a credit for under the CARES Act, those are not eligible. How the loan amount is determined is the business will look at their average monthly payroll, and they are eligible for 2.5 times the average monthly payroll. There are a couple of different determination methods for calculating that average monthly payroll. Those include either the 12 months of 2019, or it can be either February 15th or March 1st of 2019 through June 30th, more for seasonal businesses. If a business was not around in 2019, they may also use the time frame of January 1st through February 29th to make that determination. Payroll costs are limited to the first $100,000 in cash compensation. Again, that does not include non-cash benefits. So if a business has an employee that's making more than $100,000 in cash compensation, that amount must be reduced down to $100,000 for the purposes of Paycheck Protection Program. Non-cash benefits include employer contributions to defined benefits or defined contribution retirement plans, payment for employee benefits, including group health care, as well as payment of state and local taxes assessed on compensation. In terms of the forgiveness, the loan proceeds must be used during the 8-week period following the first distribution of the PPP. And again, that must be used for payroll costs, rent, mortgage interest, and utilities. And keep in mind, for purposes of forgiveness, at least 75% of the loan proceeds must be used for payroll-related costs, or forgiveness will be reduced. Forgiveness may be reduced if the head count is reduced or if the salary amounts are reduced. And again, employees making more than $100,000, the calculation is only up to $100,000. So current programs that are active right now through the SBA include our SBA Debt Relief. And with that program, if a borrower has an existing 7A, 504, or microloan through a bank, credit union, or intermediary, the SBA will be making the full payment for 6 months on those loans. So that does include the principal, interest, and any fees associated with that for a period of 6 months. So if a bank, credit union, or intermediary receives a payment from a borrower on any one of those loan products after March 27th, they must reach out to that borrower and let them know that they are not obligated to make payments on that, and either refund that payment to them, or if the borrower chooses, they can apply that to a principal payment. So again, a borrower is eligible to make additional principal payments on their loans at this time, but no payment is required. In addition, if a borrower takes out a new 7A, 504, or microloan now through September 27th, they are also eligible for 6 months worth of, payments to be made. And again, that a new loan must be taken out, closed, and dispersed before September 27th to be eligible for the 6 months worth of payments. If you have any questions on that, we encourage you to reach out to your existing lender. I know the lenders are working with the SBA to provide all the documentation. If you have any questions, do feel free to reach out to your lender. Again, in addition, as I mentioned before, on any existing SBA disaster loan, the payments are deferred on that through December 31st of 2020. There is also the availability of an SBA emergency bridge loan that is up to $25,000 that is done through local lenders again, so through any express lender that does have an existing relationship with a borrower. So if you are in need of up to $25,000, this is intended to be a faster moving approval process. We would encourage you to reach out to your existing lender if you feel that this bridge loan would be useful to you. And at this time, I will turn it over to Colleen Merrill at the UW-Oshkosh SBDC. She will be talking about cash flow.
Thank you, Tammy. So Tammy really illustrated so many different programs that are available now or currently coming your way. And so it's really important that we understand how you're going to utilize those programs in order to help you with your cash flow and keep your business alive. And that's really what we're going to go over. So cash flow, what is it and why it matters? I once heard profit is a matter of opinion put together by your business accountant. Cash, however, is the lifeblood of your business. You may be able to operate without profit for a little while, but not without cash. Forecasting cash flow and maintaining liquidity are even more critical in an uncertain economy, especially knowing that 82% of our small businesses fail because of cash flow problems. This is what is keeping owners up at night. Can I pay my rent? Can I meet payroll, my debt loads? This is the why it matters, but what really is cash flow forecasting? Cash flow forecasting is a process that helps business owners identify how much money they will have available at any given point in time. We are only focused on the cash that goes in and the cash that goes out during a set period of time. Having this information puts you in a position to be better prepared. We recommend cash flow forecasting with just about every business we work with. Sometimes we recommend developing a monthly forecast for the first year and then as an aggregate for following years. Sometimes we request that they work out a 13-week cash flow to see if they have the resources they need in the near future. And I will tell you that not every business wants to take the time. And a majority of them have never done this before. And they push back and they come back with questions such as, doesn't my income statement show me what I'm making? I'm making a profit, so why would I need to take the time to complete cash flow forecasting? Or I've never done this before and I'm unsure of what this really is. Can you help me? And that's why we're here at the SBDC. Planning is always key to a successful business. A 2016 JP Morgan Chase report states that most of the 600,000 small businesses they surveyed only had enough funds to cover 27 days of expenses. And this may leave them in a bind when it comes to unexpected circumstances, as we are in right now. Now, to be clear, cash flow forecasting is not your revenue during a period of time from your income statement. It is not what is in your accounts receivable. It shows you how much cash literally is going in and out of your bank account during a certain period of time. And we do this forecasting so we can determine, can I pay my bills today? Can I pay my bills next month, next week? It shows you what you have and what you'll have in the future. And it's so important for planning right now. Now, when we are forecasting, of course, we are estimating. But if you have a business, you are basing this on your historic cash cycle. If you're a startup, it's what you anticipate when funds will come in and when you will be paying your bills. This document is going to vary based on your business, on your industry, and really what your goals are. And sometimes it's not very precise because we are guessing. So I understand when people push back. However, it is my opinion, this is one of the most effective tools that can help you bring focus on your business. This helps you understand how fast you are depositing your revenues and if you're leveraging your terms of payment. And best of all, when you start doing cash flow forecasting, you'll get better with practice. So before we go to forecasting, I want to look at a cash flow statement. So cash flow statements can be complex, and it gets more complex depending on the type of business you are in. So I'm just going to do a very general overview of a cash flow statement, okay? And this statement is different from forecasting because what you see here is a historical snapshot of how cash flowed through a business. It shows what has been done over a period of time, and this one is saying for the year ended December 31st. Now you can do this, you can print off a cash flow statement for a month or quarter or a year. On the next slide, we'll review forecasting. But if you currently have a business, tapping into your cash flow statement will be extremely helpful. It's these numbers that will help you build your forecast on where you are going. Now, many of you might have QuickBooks or other accounting software, and you can look under your reports for a statement of cash flows to review. Now, of course, I can't get too complex in the few minutes we have here, but I can give you the basics. Reach out to your local SBDC office if you want to dig deeper into your unique business. So for this webinar, we're going to focus on the direct method using actual cash flow information from a company's operations. So this cash flow statement basically shows you the beginning cash balance you had at a certain period of time, all of the receipts you deposited, and the bills that you paid. Then you come up with an ending balance. So they're broken into three main parts: operating, investing, and financing. Most of your activity is coming from your operating activities. This is the receipts from customers. This is the payments you made to suppliers and employees, interest you received. Then you have the investing category. And this is your changes in equipment, assets, or other investments that you made. And finally, financing. And financing is just like it sounds. It's any contributions from the owner. If you took on an investment or loans, this is where you're going to categorize that. Every dollar you deposit or spend needs to have a place. And don't worry about getting it right. If you don't have everything in the right spot, it's about getting everything on your cash flow forecast, just making sure that it's somewhere there. And the difference between your inflows and outflows is your ending cash position. So I wanted to just review the statement of cash flows that you're able to produce right now. But what we are focusing on right now is our 13-week cash flow forecast template. And this will keep it a little bit simpler. Next slide. So now that you have an understanding of how your money flows through your business over the last year, we can start building a forecast based on assumptions. If your business is cyclical, we will be able to forecast based on patterns we've seen over the past few years. We'll also be able to adjust based on what we know or what we may expect. Perhaps a new product or service will be made available in the next few months, and you want to account for an increase in revenue. Perhaps you hired a marketing firm to handle a social media campaign and you expect an influx of customers or orders. Or perhaps you're in the middle of a pandemic and you need to adjust for a sharp decline in sales. The template we have here, I'm not sure if you can go to the cash flow sheet, if that will pull up the form. This statement is something we created that we can make available to you. So basically, the template we have here has 2 tabs along the bottom, so you can detail 2 different scenarios if you need to. We also include a tab for employees, so you can play with the number of employees and the impact that will have on cash flow. So our goal is really to look for potential liquidity shortfalls that we can prepare for before they occur. And how do we manage this? So let's look at operations. We have listed your inflows. Now, accounts receivable is your accounts receivable collected when you actually make a deposit. Keep in mind, that is what we are focused on. So you're forecasting weekly out when you believe you will deposit that check. So if you run your businesses by sending invoices, you'll have to be mindful and review your cash cycle. How long does it take your customers to pay? We also include credit card payments, dividends or interest income you might have on accounts, cash at the time of sales. There's also a couple of other lines so you can add additional items for your unique business. The next part is to identify all your outflows and when you believe they will occur. Your rent, your salaries, your wages, those are actually probably pretty easy. But as you think about cost of goods, if you think about insurance, we want to make sure we're placing that in the right period of time. The key here is to lay out over the next 13 weeks when you expect to pay a certain bill. The fluctuations in payments are what we are trying to determine. We are trying to lay out inflows and outflows so we can identify when we have a shortfall, or better yet, a surplus that'll carry us into the next week. So what do we do when we're done? You should at the bottom have a running total of what your ending cash balance is. Now we're able to identify our areas of deficit and where we need to use some of the program money to help us survive for the next 3 months. There's also strategies that you can implement. Next slide. There are multiple strategies to improve your cash flow, to improve your performance. Some of the items that we talk about are negotiating your extended term of credit. So if you are able to call some of your suppliers, are you able to go from 15 to 30 days? Are you able to move to just-in-time delivery and not sit on inventory? Especially today, a lot of our creditors are willing to make some special circumstances. You also want to make sure you're talking with the bank for any debts that you have. The banks today are working with their customers and deferring payments, doing interest-only payments, and they want to be kept in the loop. They are here to work with you and make sure that your business does stay in business. Marketing. I have been working with clients and they have been doing phenomenal creative marketing campaigns, live Facebook events, social media, door pickups, tapping into influencers. And mostly what I am seeing is this tremendous local support. I am seeing businesses partner with each other, putting together packages and gift cards. This is the time for you to be innovative and think outside the box when it comes to marketing strategies and trying to increase your revenue. Cash cycle. You need to really understand what your cash cycle is. How quickly are you turning your inventory into cash in the bank? And is there any way that we can speed that up, make it quicker? Can you offer some type of a discount if they're paying at the time of purchase? And maybe putting some other resources or incentives in place. Look for local resources. Many of our local economic development folks, chambers, county, and city organizations are developing low interest loans and other funding to support the survival of their local economy. We have been putting together a list of local resources that are available, so feel free to contact our office and we can help guide you to see what's available in your specific region. Just reach out, find out what is available. And file for the SBA programs. As Tammy mentioned, a lot of these programs are filling up, and as you know, it's first come, first serve. So be prepared, know what they're going to expect, especially for the PPP program that's with your lender. They probably have an application you can look at right now. So I'm going to end with just reinforcing how important planning is at this time. What does the next 3 months look like? Take the time to figure out your cash flow forecast. What is your plan for bouncing back? What new projects do you need to launch, run, or coordinate? And how prepared are you to execute some of these plans? So thank you for your time. I think we're going to turn it over to any questions that you have. Again, feel free to reach out. We know that, I want you to know that you're not alone. Thank you.
Thank you so
we'll
much.
Turn it back over to Stephanie now. She will handle the question and answer portion.
Thank you, Tammy, and thank you so much, Colleen. All great information. So lots of the links, if you haven't seen them yet, are in that chat box, so feel free to use any of those. I'm just going to go through the questions in the order that they were submitted, so hope we can get you some answers here. Shira Apple from the SBA is also on the line. Shira, you're unmuted now, so if you want to jump in, feel free to help us answer.
Great, thank you.
You're so welcome. The first question is, can the list of non-bank sources for PPP be provided? I'm in contact with many businesses who are not having success with credit unions and who do not participate in SBA loans.
Certainly. So I'll run through them again real quickly, but then also, Stephanie, perhaps we can add those to the follow-up email that's sent out. But that's Intuit, PayPal, Square, Cabbage, On Deck, Blue Vine, and Funding Circle.
Great. Thank you. Yes, I'll make sure that those go out with the PowerPoint slides, the cash flow worksheet, and any of the other materials from the presentation. Thank you so much. The next question is, I heard that Form 941 was used to determine eligibility. What about pass-through, disregarded, self-employed owners who do not issue a W-2 to themselves? What about passive income such as rent? Are they eligible?
So I'm assuming that we're talking about PPP for that purpose. And so we actually did go back and forth with our headquarters yesterday about passive income. And I will read you the information that we received from headquarters. A rental property cannot apply for PPP due to passive income. However, if they have a management company, which some structure themselves as such, they can apply for PPP. Now, one thing I'll also say is that sole proprietors, self-employed, and independent contractors are eligible for PPP. And there is very specific guidance that was just issued probably a week and a half ago, maybe it was even 2 weeks ago. So if you go to our website, SBA.gov, and then go to the coronavirus and the funding options, there is an interim final rule that is listed there that does have the specific guidance for the self-employed on there. It's very lengthy, so I don't want to read it here, but it does give very specific guidance on how to make that calculations and what to track. So again, you can either find that at SBA.gov, or you can also go to the Treasury website. There are two interim final rules that show up on there. One is the initial interim final rule, which was probably 30 or 40 pages. There was a second interim final rule that gave the definitions for self-employed and whatnot. So that second one is the one that you want to review.
Great, thank you for that. The next question is, for PPP, businesses need to bring back staff at full capacity in order to be eligible for forgiveness. So if you don't bring back your full staff, how does that affect the forgiveness? And do we know the formula?
Yeah, so that's a really good question. And unfortunately, we are still waiting on some of the guidance for the forgiveness component. We do expect that to come out any time. What we can tell you is that it will be reduced, and I believe it's on a percentage basis. However, again, we're still waiting on the exact guidance. But if at least 75% of those proceeds are used for payroll purposes, it is eligible for full forgiveness. So again, I would encourage you to register at our website, sba.gov/updates. Shira does a great job of sending out newsletters and press releases and other information that has the most recent rules, the most recent updates to programs. So that's a great place. In addition, I would continue to check our website, sba.gov, as well as Treasury, and that additional guidance will continue to come out. If you go to those websites right now, what you find is those 2 interim final rules. You will also find an FAQ document that gives further explanation to some of the rules on there as well. So again, I just encourage you to continue watching those sites.
Great, thank you so much. And just an FYI, if you look in the chat box, all those links that Tammy just mentioned are listed there for you. The next question is about credit requirements for PPP. I'm not sure what that question is asking. So the person is.
Yeah, so the PPP is a little bit different than kind of your traditional lending. There's very defined guidelines for that, and so it is different than a traditional loan program in that you don't have to, generally speaking, a lot of additional financial information, financial statements and whatnot are not required for it. It is an application that you can find at our website that can be completed. In addition, I would also rely on the application that comes through the lender, because some of the lenders are using their own internal portals for submission of applications. Some of the banks and credit union will require some additional documentation as well. If you're not a current client, they may require some additional information, but otherwise it's a pretty defined program. And, depending on the lender that you use, you can either use the application that you find on our website or directly through the lender.
Great. The next question, I've applied for and received funds for the PPP loan. I got the EIDL $10,000 advance, but have not received anything further on the EIDL. Is it possible to get the advance but not the EIDL loan portion if I already got the PPP?
Yes, so there's a couple different ways to interpret that question, but yes, if you did receive the advance, there is still the opportunity to receive the loan portion of that. Again, the loan officers and the folks at the disaster center continue, to go through those applications. I would anticipate you would hear soon. However, I will also note that if you do receive the advance, you're not obligated to receive or to take the loan portion as well. And even if you are denied for the EIDL loan component, you are still eligible for the advance.
Great. If a sole proprietor applied for and received a PPP loan, can they now apply for a loan to account for their line 31 net profit? In essence, the amount of money that they made for themselves.
So I'm not sure what the question is.
Yeah, I'm not sure. I think it's asking if you used PPP to pay for payroll, can you also apply for the EIDL to pay yourself, is what it sounds like.
So a borrower is eligible for both an EIDL as well as a PPP. The only difference is you can't use the same use of funds for each product. So what I mean by that is, let's say you have a PPP and you use that for purposes of payroll. The EIDL must be used for something else. So you can't use that same use of funds for the EIDL. Otherwise, it's really kind of considered double dipping. So perhaps you use the EIDL to pay inventory or other expenses that would come up. So yes, you may have both. You just can't have the same use of funds. If a borrower already took out an EIDL and did use those funds to pay payroll, then that must be rolled into the PPP that they have and paid off with the PPP funds.
Okay, great. Another
This is Sharon. I'll just add that once you get a PPP loan, you can only get one. So, yeah.
Okay, great. Another PPP question says, can you apply for a lesser amount if you know you can only bring back partial head counts, or must it be based on full staff head counts?
Yeah, so that's a real good question. And, it is up to the borrower what they apply for. But what I will tell you is, as Shira said, you can only have one PPP loan. So, we would recommend that you take that for the full amount that you are eligible for. What I have had many business owners tell me is that they are keeping the PPP funds separated and keeping very close track of what they're using that for. And if they can't use all those funds for what will be eligible for forgiveness purposes, you can always pay down on that PPP loan with the remaining funds. So, just some things to keep in mind there.
Okay, great. So let's see. The next one is kind of long. I'll try to get to the gist of it here. If a PPP loan application is turned in and the bank secures your SBA loan number, my lender is saying I need to apply again in the next few days before the funding runs out.
So I'm not exactly sure what the question's asking, but what I will say is that if you did submit an application in the first round for the PPP and the bank submitted it through E-Tran and they did receive an approval and a loan number, you are in. The bank then does have 10 calendar days from the approval date to fund that loan. So I would encourage you to connect with the lender that you worked with for a status update. I can't, give you any status updates on that, but if you did receive an approval through the original funding package, you should be all set. If, however, they did not get a loan approval and a loan number through the initial funding package, the SBA may not have a queue for applications for any future funding. So if you didn't get in, you do have to submit another application in order to be considered for a PPP loan. But again, I would really reach out to your bank before I did anything just to see, were they able to get you submitted and approved before?
Okay, great. The next question is asking about EIDL loan turnaround. And since that program is on hold right now, we just don't know what the turnaround time is. I think the best thing to do would be check that SBA.gov updates to see when things change. Do you agree, Tammy?
Yeah, if they do have an existing application in, so if they did have an application in before that last Thursday when the website was temporarily put on hold, the disaster folks do continue to process those applications that were submitted. And unfortunately, I can't give you a timeline. Knowing that our Wisconsin businesses have started to really receive movement here in the last week and a half to 2 weeks, we do anticipate it will be soon. But what I would tell you is, perhaps it might be another week or two. I just can't give a timeline. They haven't provided us with any updates on timing for that, but just know they do continue to work through those existing applications on a first come, first served basis.
Okay, great. Are there extra limitations for dividend distributions for prior year earnings and tax payments and estimated tax payments?
I'm not sure that I can answer that question. I'm sorry.
Okay, all right, that's no problem. All right, so we'll just kind of go through a couple of repeat questions here. I've applied for the EIDL but did not ask for the $10,000 advance. Will you automatically receive the advance? So if you filled out the application and didn't check that $10,000 advance box, it's my understanding that you will not be considered for that $10,000 advance. Correct, Tammy?
That would be my understanding as well. When you are assigned a case manager, you can ask further questions about that, but yeah, there was a checkbox on the application, so that is my understanding as well. Shira, do you know anything different?
No, that's would be my understanding also.
Okay, great. What if a bank says they will issue the approved funds from PPP on a credit line basis?
Huh.
I would work with your bank on that.
Okay, great. It's my understanding that the 8-week covered period begins immediately once the funds are received in your bank account. Is there any flexibility on the timing of that?
So, you know, all that we can do is talk about what is in the law, and based on what is in the law right now, the timing does begin with the first disbursement of the loan proceeds. That does begin the clock on the 8-week period. So based on the letter of, you know, what we have right now, no, there is no flexibility in that timeline. I don't know if they'll make changes going forward on that, but we can only answer what we know right now.
Okay. If you did not receive a case manager or a loan number for the first round of EIDL and they approve a second round, does the applicant have to reapply, or will it keep the application in queue?
Yeah, great question. So what we have been told right now is that no, you do not need to reapply. It's not like the PPP, so they do continue to go through those. They have not, it's our understanding that they have not fully exhausted the initial funding package, but they continue to go through and process those applications. We are told that if you already put an application in, you do not need to reapply when and if funding is reappropriated for that.
Okay, great. This question is about application for a new business loan. I heard from a lender that once PPP funding runs out next week, SBA is shutting down July 1st. We are under the understanding that the application is turned in and your bank secures the loan. You can complete the loan process during that shutdown. My lender is saying that.
I'm not quite sure what that means.
Yeah, I'm not sure. There's not really a July 1st shutdown that I'm aware of, is there?
I have not heard anything to that effect. Shira?
No, I haven't heard anything suggesting that either.
Yeah, so I think maybe just checking out the SBA.gov or updates section might be the best thing for you. And that is it for the questions that we have in here. So Tammy or Colleen, thank you both so much. And any closing remarks?
We would like to just thank you guys for joining us here. Hopefully the information that you learned is useful, and as again, hopefully the additional round of funding does come up. We hope that you'll all be prepared. Feel free to reach out with any questions. Again, we would encourage you to reach out to the resource partners. SBDC locations are all throughout the state. We do hope to continue having some additional sessions as we go forward here. But again, we want to thank you for joining today and wish all of you the very best of luck and health.
Great.
Thank you, everybody.
Take care.
Thank you.